Yes, thank you, Tina. Hello, everyone. Thank you guys so much for joining. So, my name is Megan Williams, and I'm representing Silicon Valley Bank. For those of you that are unfamiliar, SVB, we consider ourselves the leader in the innovation economy. We are with you from early stage all the way until IPO. We have served as the leading financial partner of the innovation economy, and we are super passionate about supporting founders on their path to success. And this is all founders. My team specifically is called Catalyst 2045, and we specifically work with emerging segments. So that is women, Black, Latinx, everyone who is considered underrepresented. We specifically have programming, funding, banking options for this segment. I see a lot of you on this call are familiar and have come in through Catalyst 2045, and I'm so happy to see you guys here. And this is, as Tina said, the first of many series that we will be doing to specifically support you guys on this call. So thank you for joining us.
Thank you. We're so excited to be partnering with SVB. They have been honestly just such a leader in terms of supporting the innovation space. But yeah, without further ado, our amazing speaker today is Ella. Ella is a senior VP and leads Israel and India tech VC banking within the Global Gateway, which is SVB's international market expansion team. She works with some of the most disruptive and exciting companies from emerging international markets and is based in New York City. Ella extends SVB's network and services to entrepreneurs and investors from these global markets as they expand and scale in the US. And so we could not be speaking to somebody better for the topic of fundraising and the current climate. And in 2024, and myself as a founder, I have many questions that I'm going to be asking Ella. But before I pass it off to Ella, just a quick also introduction for the rest of the team here. So we have Megan, who we just heard from, who is a program manager from SVB. Sydney here as well, who is my team lead at the startups side of Win, the marketing lead. And then myself, again, I'm part of Win as well as a founder. So with that, I will pass it off to Ella and let's hear about the state of the markets.
Thank you, everybody. Thank you, Tina and Sydney and the Win family. We're very proud of that partnership, and I look forward, as well as Megan and the rest of SVB, to deepening our engagement and continuing this awesome series. I think as we think about this current climate, this type of network and supporting founders, it's not a nice to have. It's truly a must to have, and it's essential. So just very happy to be part of it. So as you guys mentioned, my name is Adhanan. I'm a senior vice president at Silicon Valley Bank. I work mostly with founders and venture capital firms from international markets as they expand into the US. We help them not just scale into the US, but really navigate the complex nature of the US VC and startup ecosystem. So essentially, we serve as a connecting bridge between global innovation, because innovation is global, and we serve as a connecting bridge between global innovation to US VC and startup market. So, I'm going to kick it off with some overview of our state of the market, brought to you by our own SVB market research team that have collected sort of an overall snapshot of what's going on in the market, both looking at 2023, but also looking at some indicators as we go through 2024. I think, there's so much that has been said around the current climate, and we've all impacted by what's happening, and founders, investors, and obviously SVB is part of the ecosystem. And over the past 2 years, the tech sector faced its sharpest downturn since the dot-com era, actually. And entrepreneurs showed remarkable resilience. You guys, some of you are founders, navigating shorter runways at the moment, challenging capital raising, climate. But as we continue on the long path towards recovery, I'm hopeful and encouraged by the innovation all around us. Feel free to go to the next slide. So in this section, we're actually looking, as I mentioned earlier, at a snapshot of the year ahead, focusing on some key indicators as we go through 2024. We do believe that, some indicators will improve. Just quickly touching on more, we'll see more IPOs. We are hoping to see slightly higher late-stage valuation than we have currently we have now. As you guys know, late-stage companies have been impacted the most, and looking forward to seeing more Series A deal activity. But obviously, that said, it isn't all trending in the right direction. Even as US VC fundraising hit a 6-year low at the moment, we're still forecasting another down year driven by weak distributions and LPs already or at near their target allocation to venture. So again, while it is not all a rosy picture in the short term, we're gonna see that tightening market for a little more time, but some important indicators seem quite positive in the long term of the ecosystem. The next slide, we're also seeing VC investment outlook, again, not just the fundraising for VC, but also their deployment of investments. We'll see a lower and longer in the US VC ecosystem, and it is unlikely to bounce back quickly. Just for a comparison, today there are some similarities. I mentioned the dot-com bubble earlier, but in both instances, the corrections were endogenous. Tech and low interest rates contributed to the run-up in fundraising and investment in those two periods. It is important to note that it took over 18 years for US VC investments to return to peak levels following the dot-com bubble. So while we aren't putting a date on the current recovery, it's unlikely that we'll see $350 billion in annual investments anytime soon. Again, just reiterating, short term, we're probably going to be maneuvering this current climate, but long term, definitely hopeful for just slightly more positive sentiment. Next slide. So in this section, we look at the dynamics impacting the flow of capital into the VC. So if earlier we spoke about how the investments coming out of VC to companies, obviously not just companies are raising, also the VCs themselves. It is not a surprise that fundraising has become harder for them as well. The time between funds of the same series is creeping up to pre-pandemic levels and is likely to continue extending as investors slow deployment, and it takes longer for funds to close. Another thing that we actually seeing is not only it takes longer to close funds, it also, they're also less likely to hit their target size. If you compare between 2023 and 2022, in 2023, only 60% of funds that closed, in 2023 hit their target size versus nearly 80% in 2022. So obviously that's happening as well. And of course, as a result of that tightening overall market, the pressure is even clearer on emerging managers. We also know that they're closing at a lower rate than established funds, even though they make up the majority of funds that are actively raising capital. Next slide. Another interesting key of investment allocation is the difference between markets within the US. So while we often look at the US innovation economy as a monolith, the reality is that there is a significant differences between markets within the US, with not surprisingly, New York and California leading the pack. I think nearly 60% of US VC investments in 2023 went to these core markets, despite the fact that top line revenue growth was pretty comparable across markets. So in addition to these core markets within the US, New York and California, in addition to them raising more capital, we're also seeing that generally speaking, they have had higher valuations as well. Next slide. In terms of benchmarking, we are seeing that top line growth slowed in 2022 and slowed again in 2023. This presents a challenge to obviously companies raising capital because while the growth at all costs mantra we've had in 2021, when money was on the trees, that has been replaced by a focus on efficiency. So investors still favor companies with growth, even though they're not expecting that at the moment. As a result of that, nearly 70% of US VC companies have reduced net burn in 2023. But as you guys probably aware of, many didn't and are facing short runways across the board. One interesting fact that we've also learned as we put together the state of the market is that one thing that investors also look at is they essentially favoring companies that have technically differentiating themselves. So when you look at IP data for companies that have actually raised, we found that companies with at least 15 patents have an advantage over companies that don't. So that's I thought that was a pretty interesting indicator for what VCs are looking for at the moment. Next slide. So we can't talk about this landscape, current landscape, without mentioning the AI. It is not a secret that AI tech garnered the lion's share of VC investments. The AI cycle has not suppressed. If you look at the mobile cycle in relative sizes, it actually accounted for 1 in 5 deals done in 2023, and 1 in 4 funds that closed, in 2023 have an AI focus. Not surprising, but this growth is obviously not random. It was a long time in the making and slowly picking up steam since the mid 2000s. And again, essentially doing these once in decades cycles, many top companies are emerging, and we've seen that with Uber, and you can see here Uber, WhatsApp, Robinhood, all have emerged from mobile, for example, and we have no reason to believe that AI will be any different. The AI technology is quickly becoming a horizontal platform, and we've all seen that it's leading to efficiency gains in nearly every sector, across the board. And last but not least, last slide is exits. And again, limited IPO activity in 2023. There were actually 725 US unicorns. It's a record high. It's just that there was a huge backlog of companies ready to exit, but the gates were mostly closed. They're just indicating that public markets, did not have the appetite for the private market companies to IPO. And of the 6 US VC-backed tech IPOs that have happened in 2023, only 1 saw positive performance post-IPO. And we've also seen down rounds IPOs are increasingly common as well. Talking about long-term in this activity, as late-stage investment slows and the hybrid PE VC investors pull back, we may see companies forge a path to profitability sooner, and hoping that for quicker exits, which essentially it brings us back to how things were done historically. And I think that really just sort of summarizes and concludes the overview of our state of the market. And I'm happy to send this after the call, to all of you that are interested. There's some great stats. I just went over highlighting some of them, but it's definitely longer. And I think everyone that is actually raising right now and wanting to understand the bigger picture, happy to send over the slides. But I want to leave you with this. I think Julie Lowe's, if I remember your name correctly, but someone said, losing sleep over current climate and current fundraising landscape. I do want to leave you with this. It's definitely a very tricky environment across the board. And we know that when it's a very tricky and tightening market across the board, it obviously impacts, it trickles into what we consider underrepresented groups, and obviously, women being the majority of it. But I do want to say that, just looking at what's happening right now, despite the tightening environment of investments and fundraising, I'm looking the founders' resilience, supported by, the rise of new technologies. I mean, it's AI, but obviously it impacts, AI is impacting all industries. So, bottom line is that game-changing technologies, and if you're disrupting industries and you're solving great problems, would be a result of patience and persistence. And some of today's best companies, I mentioned some of them earlier, emerged after the dot-com crisis. So in this new era of investment slowdowns, companies that will become more efficient and more technically differentiated, and you're solving a really good problem with fairly large markets. I think if a company can make it to the other side, it will certainly thrive. So with that, I'll bring it back to Tina to kick off our fireside chat.
Thank you, Ella. Thank you so much. That was so insightful. I think it's hard sometimes to get such an in-depth overview of the current market. And I think as a founder, that's something that is really helpful, just to understand, like, what are you entering into? So really appreciate your rundown.
Yeah.
And
I think it's context, right? I think
Yeah.
for founders, oftentimes, it's such a busy work and taxing, right? And you're so caught up with the things that you need to execute, but you do need to understand the context you're operating in, the environment you're operating in, and strategize accordingly. So
exactly. Yeah. So really appreciate you taking the time to walk us through that. And I'm sure the slides will be really helpful for everybody to review afterwards. But I think, you touched on various aspects of what's changed in the last few years, but I'm curious to hear from you, if you had to choose one word to describe what has been the biggest change in fundraising for early stage companies, so, pre-seed to Series A, in the last 2 years, what word would you choose?
One word, I would say selective, because people say, I'm debating between cautious and selective, but I think it's selective, because clearly when if there is money, guys, it's not like there's no money. There's dry powder for VCs, even from a few years back. You guys all know that there was a tremendous market just a year and a half ago, and some companies did raise a lot of money. Just 2 weeks ago, companies that in the cybersecurity or AI, they've raised so much, and they actually IPO'd as well. So there is money. I think now we're just going back to the basics, and if I'm looking from the investor lenses, they're just actually, it's a good point. So the dynamic is shifting, right? If a few years ago it was a founder market, right? Money was on the trees, and founders were able to raise on ideation level. If you had a good old idea, a good team, you'll get checks even through Zooms. And you remember what happened during COVID. But I think now it's fair to say that it's tilting towards investors. So the word that I'm using, selective, is from the investor side. They do have the money. They're just slower to deploy, and they're just more selective. Again, and if in the past they didn't hone in unit economics or metrics, or now they can, because they can take their time. They can take time to deploy. They can take time to do the due diligence. So they have the privilege of being more selective. And
Definitely.
you want to be that winner of the new batch of founders that are raising.
Right. Yeah. And before I ask my next question, just for everyone a heads up. So I'm going to ask a few questions here, but we're going to have a Q&A where we'll open it up to everyone. Yeah. So please feel free to come off mute, raise your hand. So you can keep your questions till then or put them in the chat, whatever is easiest for you. But just to your point, Ella, so in terms of being, selective, I think one thing we hear as founders is that part of that like selectivity is a bigger reliance now on certain metrics and benchmarks, and that's something that we've heard from even the founders here today on this call, is curiosity to understand better, like what are those metrics, and do you have a sense for like benchmarks for early stage companies that investors are really looking for, that's almost like a filtering process to get in front of them?
Yeah. Listen, I think obviously it varies depending, which market you are, industry you are, and at what stage. I know you mentioned early stage, but if you at the pre-seed level, for example, or seed level, really you don't have that much. I don't think investors are looking for you to hit all your quotas and your financials and revenue, but I think no matter how you look at it, you need to have, first and foremost, you need to be need to have a good team, right? Because early on, they do invest in teams. So you need to answer yourself those three questions. What is the problem statement? Like, what am I trying to solve? Okay. And why am I individually, but also why is my team are the best people to execute on that? Is what's my domain expertise around it? And I think ultimately is you don't have a business without customers. So you need to be, I think Jeff Bezos said it, you need to be customer obsessed, and obviously in the beginning, it's early on, there's a small traction, but you need to check your user engagement, how are you faring against competition. And I would say something maybe unorthodox, but remove your ego and just really listen to feedbacks from, if you do have, I don't know, a few customers that you deal or you engage with, listen to their feedback, work on it, just improve and refine your offerings early on, so that way you don't have to pivot down the road. And so at the early stage level, and of course we can talk later about unit economics, some companies early on, they can get to organic growth and they can even get to revenue very early on. But I think ultimately, as a founder of early stage company, and specifically when we look at earlier side of the early stage, just really answer yourself these major questions that I just mentioned, and focus on your customer organic growth.
Yeah, that's really interesting. I mean, that's definitely true. For example, like I've done a pre-seed fundraise, and what they were particularly looking at was the team and the vision and the customer traction early on. So there isn't much metrics to go off beyond that. Yeah, definitely. And so I'm curious, like in this process of both, running your company, maybe early stage, but also doing one of your first fundraisers, you talked about customer obsession, and that sounds like, almost like a superpower. You were saying your superpower earlier is you can sleep through anything. I'm wondering, is there, if you think of like fundraising as a superhero's journey, what do you think are the top 3 superpowers that a founder needs in order to maximize their chances of success?
Yeah, I love that question. To level set, this is people business. I know I mentioned unit economics, metrics, even your relationship with the customers. It's really people, especially when you fundraise from a VC. I think if nothing else, if you take something out of the session today, I want you to remember that, and twofold. One, a lot of founders, oftentimes because they don't have the access or they're just like not planning well. You don't fundraise when you actually need the money. Okay, you don't go to the grocery store when you're hungry, right? So you need to plan ahead. So what does that mean? If it's a people business, you need to build those authentic relationships ahead of time. You already signed up for the mission of being a founder, right? And you know that one of the milestones that you're going to have to touch on as you're building a company is you're going to have to go on an equity raise. The relationship, and I'll get to that in a moment, but as you thinking about fundraising, it's never too early to build relationship. Even if you're part of this kind of group, right? Or you just you leverage your own existing network before you need it, and just being planning ahead. And that way you don't, the relationships are not transactional. It's not, oh, I need to close the fundraise in 2 weeks. It's very hard to do. And I think if you plan ahead and you build those authentic relationship, which, by the way, talking about women, I think that's actually our superpower. We have the ability to build more authentic relationship if you plan ahead. So never too early to build relationship. That's key superpower, that's the key differentiator, because also once you do that and once you're actually ready to fundraise, it's just a more authentic and organic way to do it, and not transactional. And then ultimately, you are gonna pick your investor, right? So when I say it's people business, you need to be able to have a good relationship with your investor. This is at least for 10 years relationship. Right. And if you didn't plan ahead, and you're finding yourself in the midst of fundraising and you need to close something fast, I would say leverage existing network and make sure that you choosing in like a warm intro. I know not everybody has it, and I know that's a privileged way of but again, just make sure that if you want to stand out, it also shows a signal to the investor, oh, she was able to leverage that person, and that person to connect to me, that shows that you just slightly different than the rest. So but definitely start earlier. The second thing I would say, storytelling is crucial. And practically speaking, it might sound a little nuanced, but your deck is going to be the first time, especially early on, right? Not everybody have VCs just writing checks to them tomorrow. So you're gonna have to use your deck to tell your story. I think obviously just make sure that you're not, you're including the things that can tell your story the best way possible. From again, why are you the right person? Your team strength, especially if you're early stage. So if you have some organic growth, include that. Your total available market, what are you trying to tackle, and how big the opportunity is. People want to make money, right? So they want to see what intersection are you sitting on, and the things that you choose to highlight in your deck also says things about a company, and obviously make sure you're including your vision, but just a nice balance of not just your vision and your dream, but also how are you bringing it back home. And it's like, this is really why I'm looking to fundraise, and this is why you should care about it. And just you do that, and you obviously do that after you're researching the investors and seeing what their focus is, and there needs to be an alignment. And I would say thirdly is preparation. It's the same way I said, if you, it's never too early to start relationships, and you're never over prepared. And again, I think as women, I think it's natural to us. I'm speaking on behalf of all of us, but I think it's just never. You have to be prepared, not just prepared in terms of knowing who you're meeting, or just being able to understand their focus, their background, and their track record, and have they invested in that specific segment that you're in. But also you need to be prepared for their questions, and you need to know your stuff. That we build trust. Like when I talk about relationship earlier, trust is key, and when you show your competency and your preparedness, it's just an amazing way to stand out.
Yeah, definitely. Thank you. Yeah, and I think, to your point, I mean, I don't want to generalize, but I think, being prepared is something that, and organized is something that women tend to excel at, I find. I have 2 male co-founders, and that's definitely my role. I'm the organized one. Exactly. Yeah. And so I'm curious, especially I think, for female founders, what is the biggest mistake or oversight that you see women do during the fundraising process?
Yeah, that's actually like a very important question. I would like to sit here and say, we're good, just be a founder, don't think about your gender. But we weren't born yesterday, and there are some misalignments in the market. It's still very much heavily dominated by not just male founders, but also male investors. So it's all around. But I think being a founder, I mentioned earlier, it's such a taxing journey, right? And being a female founder or some sort of a minority, it's even deeper layer than that. Because I know that I work with international founders as well. So there might not be a minority in the sense that we know it, but they're also trying to come to the US. And, it's easier to raise when you sit in Silicon Valley versus when you sit in Egypt. So, but specifically speaking on women, I think I'll say three things. One is I love the way we support each other. It's essential. It's necessary. We cannot do it without it. I think while you're building or your female by female network and you're going to these rooms and you get the support that you need, or maybe you give the support that other people need, don't be careful to limit yourself in these circles only. Because as I mentioned, it's heavily dominated by decision makers. I'm not even talking about founders. I'm talking about folks that are sitting in VC decision makers, the general partners, the partners, investment partners. The majority of them are male still. So you want to make sure that while you're building your, sort of sisterhood and female network, you want to make sure that simultaneously you in rooms networking with the folks that are unfortunately making up a lot of the decision. So just try to balance those two as you're building your network. That's one. And then secondly, I would say, do not be afraid to negotiate. If you need to do the Wonder Woman pose before any, I don't care. But I truly saying this from the heart. I think for as female, even when we do get an offer, we most likely take it immediately because we don't want to lose the opportunity. Since know who you are, set some boundaries, and really value your business. You're going to be working hard, okay? So and you guys know that we work a lot. So I think when you get an offer, don't be afraid to negotiate that, okay? At the risk of ultimately not getting it, because it's at the end of the day you have to value what you're building, and if you don't do it, why would other people do it? And sometimes you will be tested. So even at the risk of losing the deal, you should negotiate at least 1 to 2, right? Not immediately take the offer that you're getting. And thirdly, I would say, I understand that, culturally we're raised as female to be humble and to, not sort of underestimating our achievements. You don't want to seem sort of too ambitious or aggressive, all these words that people throw at you. So no, if you hit really good milestones, and even if it's not perfect, right? You make sure to highlight that. Do not be afraid to highlight your milestones, your achievements. It could be anything from your background. If you are, I don't know, a medical doctor, that you're building, a medical device right now from some healthcare life science company, and you've received award from, I don't know, for the most amazing research you did in the university, like you should highlight those, because VCs at the early stage, they invest in people, they invest in teams. Most likely you're selling yourself, right? You're selling, you don't, sometimes we're so early that we don't even have product market fit completely. So look at yourself in the mirror, learn your background, and just say, don't be afraid to really just, shine a light on your achievements, and not in a boastful way or just avoid from being too humble. It's your business. These people want to see their money. They want to see ROI. So you go out there and bet on yourself.
Yeah, definitely. Yeah, I think that idea of like it's business, like removing even yourself from it a little bit and thinking about it as a founder, like on behalf of your company. I think that's also
there's
really
no room to play small. Like there's no time.
Exactly. Yeah. Yeah, and I think we're gonna do, as part of this series of events, where we want to do one session on negotiation as well,
Yeah,
on like really focusing on how do you do that, how do you build that skill, because it's definitely something that doesn't come, I think, as naturally to some of
yeah,
us.
yeah,
Yeah. Just being cautious of time here. I think I just have one more quick question
yeah.
for you, which is that we're all here today. We're all gathered. We took time out of our day to be here. And I'm curious to hear from you. What is the role of mentorship? You mentioned earlier that some of us might not have those warm intros to, actually get in front of investors. But what do you think is like the role of mentorship in this entire process? And do you have any advice for actionable next steps that we can all take out of this call to make the most of this opportunity of us being here together today?
Yeah. If you guys don't have mentors in your life, guys, like you need to, it's not even for women, or it's not gender, it's not, but especially if you're a woman trying to break through and breaking, ceilings, if you're a woman in business, you need to have mentors. And I think the first thing, the low hanging fruit could be, where do you find mentors? So low hanging fruit could be just being part of groups that are literally, their mandate is to support women and to bring women together, and that way you sort of build your own organic connection with your mentors, because it also has to have chemistry. But as a rule of thumb, I say your company has an advisory board, right? Or you have a board of directors. For yourself, first of all, I'll go back. Representation matters. If you're women trying to be an entrepreneur, and you want to ring the bell of NASDAQ one day, just, obviously you can, it's not very easy to go out and find the founder of Bumble to befriend, right? But I think you can study it. You can be part of a group that ultimately might be introducing you your mentors, or folks that you feel more naturally inclined to connect with. But I really think also, peak, think about the women and actually draw a circle. It's not even funny. Like, draw a circle of women in your life, or in your proximity, where you look up to. They don't have to be in your specific field. It would be perfect if they do. But even if they're, I don't know, I'm in banking, but I'm in tech banking, right? So that's close enough for us to connect, for example. But really, just do a list of all the women that you sense of sort of look up to, and then try to have coffee meetings with people. Would love to have coffee with you. I'll tell you that, even though they're busy, obviously be mindful of their time and be succinct, and not waste their time. But people, just try to grab coffee with people you want to learn from, right? Be always in a learning growth mindset, and that will come naturally. You don't go up to people and say, be my mentor. But I think after a coffee or two, there's a rapport building, and maybe you can even have an investor mentor, right? So as you build your network. But I think, again, everything is, it takes a village, and in the good sense of it, because the word of ecosystem in our business, it's really just, it's key, right? We have to build ecosystem for ourselves. You need to have a board of directors for your own growth, as the female in business, female leader. And and if you don't have anyone, absolutely anyone, read books about women that did it. Like, you just be very resourceful, because you need that inspiration, because it's a very lonely journey, and it could be even lonelier when you're a female founder. And I'm also happy to connect with everyone that wants to connect afterwards. Yeah, and be shameless. Ask for help. Really, just be shameless.
Yeah, thank you. I love that. I love the board of directors for your own growth. That's gonna stick with me for sure. Yeah. All right. Well,
and I'm gonna say one more note.
Yeah.
If you don't find female mentor, because get a male mentor, right? Get
Mhm.
somebody on the board, because you do need the support.
Yeah, definitely. Yeah, some of my amazing mentors are men, and they're also incredible.
Yeah,
Yeah.
because as women, we're still fighting for ourselves, right? We're
Yeah.
still the only women, so sometimes we don't even have time to mentor other women. So
Yeah.
if they don't have time, if you can't get a male mentor, but get a mentor.
Yeah. No, for sure. Thank you so much. I know we've only got 10 minutes left, so let's hand it over to audience questions. If you have a question, please feel free to raise your hand, come off mute, or we can start asking some stuff that was in the chat here.
Oh, Anita, you have your hand up. You can come off mute.
Thank you. And actually, I had posted my question in the chat. I'm first going to say thank you. What a great knowledge share, and I appreciate that. I just wanted to ask, because as I looked at Ella's data, she talked about where fundraising is still happening, and
Yeah.
I'm fortunate to be in California, as you said.
Yes.
It would be much more difficult if I were in Egypt. At the same time, I know that historically, California VCs haven't invested in women, and many of us are women of color on this call. What tips, what tools can you offer us so that we are presenting our best selves? Because as you said, at early stage, they're really looking at us, right? And the language that I've heard folks use is I'm investing in the jockey. So if how do we make ourselves presentable as the most attractive jockey?
Yeah. No, you're absolutely right. And as I was looking, during COVID, there was like a mass migration, right, out of the core markets. So people moved out of California to Portland, and from New York to Miami, and you name it. So you would think that, I work with international founders, right? So, I truly believe that innovation is everywhere. An incredible leading company can be built everywhere and by everyone that wants to do it. To your question, it's not easy. It's not easy to build relationship. You obviously you are in California, but if you are in Kansas City, how do you? So I think start low hanging fruit can be, try to see if there is any local access that you get. I mean, by the way, SVB, we're everywhere. So if you guys do want to connect, and happy to connect the dots for you. We do have different programming and offices around the country. But try to see, what are the things that are happening within your own ecosystem. If you live in Atlanta, if you live in Dallas, and then when I say be shameless, I mean it. Like I've had times where I had to reach out to cold call people, to go on LinkedIn, connect with them. The world, yeah, Megan. So the world is connected, guys. Use technology to your own benefit. So even if you live in Egypt, and I work with companies from Egypt, I work with companies from India. Technology is working to your favor at the moment. So don't be afraid connecting with people, on LinkedIn, and make sure that your online presence is appealing. Just curate that, because they can't see you in person oftentimes. So just tell your story in a very intelligent and articulated way, that when people look you up online or look at your LinkedIn, they can actually feel comfortable, and not that you're some weirdo harassing them on online. So I really think that if technology exists, it's exactly so we can use it for things like this, and other than saving the world. But it really just easier to connect, and that's how oftentimes when I need clients, or I'm shamelessly stalking them down on LinkedIn, okay? And you just want to make sure that when people look you up, there is alignment and there is similarities, and you're actually from the same business, and create content too. Like if you go to an AI, I don't know, robotics conference in Michigan, like put on your thoughts online. Like, hey, like I was in this conference. This is the things I've learned, and when just and follow through. give value to the world, right? Without even expecting to getting back. And yeah, use technology. If you're far away from these core markets, you have to grind and in a good way, right? Just online engagement, online presence, reaching out, unafraid, and connecting in that way. And oftentimes you can also see if you have mutual friends, maybe you know the 5 thumbs rule, the 5 fingers rule. Maybe you don't know the first one, but go backward and see, maybe I do know somebody that knows somebody, and then just make the connection. I do want to make one more point, because we are focusing on female at the moment. So again, I said earlier, I wish I could tell you that there's no conscious behavior and biases, and we all good. There is. One of the things that actually study did found, and it's actually very important, that's when you actually get the meeting. Okay, so let's just say you went through the process, you have a meeting with investors, the same way that men usually afraid to give feedback to women in order for them to grow because they're afraid from some reason. The study showed that when male founder, when they are in the meeting, they are asked promotion questions versus prevention questions. So give you an example. If you're a female founder, if you're a male founder, you go into a meeting, the partner would ask you, how big is the opportunity? Like, what else can you do? How aggressive can we be? How much can you capture? What else do you need in order to execute this vision? Like very much promotion question, like opening up to like drilling down the vision. But it's for female and it's multiple studies. They show that female founders are being asked prevention questions, meaning how are you going to mitigate this risk? How are you going to protect yourself from this not hitting this milestone? How are you going? So these are like sort of not questions that are opening you up. So my small advice, and this is very much recommended, is that when you do get these questions of like, how are you not going to fail? Instead of how are you going to succeed? Answer them for to inform and to answer the question, but make sure that you're redirecting the conversation, talking about your vision, your solution, your product market fit. How are you? I like the angry faces. How are you going to your execution? You guys know that women are biggest executors. So all of these things that you can do, just redirect the conversation. Don't shy away from answering that. Don't be defensive about it. Don't be like, oh, why are you asking me? Because I'm a female. No, answer it. But then you say, but let me tell you about this. This is the solution that we're doing. This is the market share that we already captured. This is what we're going to do in order to hit our next milestone. And this is what I need in order to just own it, own your vision, and just don't let them go back to that, how are you not going to fail question.
That's amazing. I think, even that inspires me to think that for an upcoming session, maybe we should have one around that and then practicing that skill. Yeah, that would be really fun, I think. Yeah.
And there's no way this is what I call cheating the system, because past me would have been angry, obviously, and be like, don't ever talk to me like that. But new me, exactly. Don't give, but new me is like, okay, like I'm gonna cheat the system. I'm gonna answer the question, but I'm gonna bring it back to what I want to talk about, what I want to deliver. Because by the time I leave the room, I want to know that he knows 1, 2, 3 about my company.
Definitely. And actually, so we have 3 more minutes here, but I wanted to just take a second to share some of this in a worksheet that we put together, because Ella was kind enough to kind of share with us these tactical superpowers that she thinks will really help us be successful in our fundraising. And so we put together this little checklist, and when we run events, we're really sort of bullish on giving you very practical, tangible next steps coming out of a session. So hopefully this checklist serves a little bit as that, but it has the three superpowers to think about when you go into a fundraising. And it's, I think, just going to serve as a good reminder when you do go into this process. You get really bogged down on the day to day and, responding to those emails, trying to hit inbox zero. But having this checklist to take a step back and to remind yourself, like, what are the core things to really excel at to have a successful fundraise will hopefully serve as a really good reminder to everyone. So, this will be available in the chat, if not already. And then also we'll follow up with the checklist in an email after the event. But before we say goodbye, just wanted to also highlight how you can continue the journey with us. So Ella was kind enough to say that we can connect with her directly by email or LinkedIn. So thank you so much for that. And the details are also in the chat. And in the meantime, we're going to have our next session is going to be on pitch deck review. The details on that will come in an email. But in the meantime, if you cannot wait to join our next event for the event series, we have a couple in-person WIN events coming up on March 28th, April 5th, and April 10th in New York. So if you're in the area, we would love for you to come join us. And more details on that are available in our WIN events page, which will also be in the chat. But I just wanted to say thank you so much, Ella, for your time, for sharing your knowledge. It was really insightful. And thank you for everyone who joined us today for your time. We really appreciate you coming and sharing this afternoon with us.